From the comments emanating from my last episode, I feel very compelled to explain what a treasury bill is and what a treasury bond is, how you can go about investing in treasury bills and treasury bonds. Welcome to Sophie's Chronicles. Welcome to our series From Hustle to Hammock, where we debunk the treasury bill myth. But what really is a treasury bill? A treasury bill is a short-term loan that you give to the government through the Central Bank of Kenya. It ranges from a period of 91 days, 182 days, or 364 days. Consider it a loan you give to the government for it to meet its obligations. Treasury bills are safe and secure investments because they are backed by the government of the day. They are short-term investments which gives you flexibility in terms of investment. They give you liquidity. Treasury bills are also a good investment choice because they give you guaranteed returns. At the end of each period, you receive your money. If you bought a treasury bill for 91 days, you'll be paid after the 91 days. Of importance to note is that treasury bills are sold at discounted rates. For example, if the face value of a treasury bill is 100,000 at a rate of 10%, then you buy that treasury bill at 90,000 shillings. At the end of the 91 days, you shall be refunded 100,000. That is how treasury bills work. The other clarification I want to make is taxation on treasury bills. Interest on treasury bills is taxed at the rate of 15%. I'll give an example. If you invested a treasury bill of 100,000 for 364 days at the rate of 10%, your interest is 10,000 shillings. Out of that 10,000 shillings, there is a withholding tax of 15%, which means your net interest is 8,500. The other clarification I'd like to make is about interest on treasury bills. If you look at the 91 days treasury bills, the 182 days treasury bills, and the 364 days treasury bills issued in one day, they all have different interest rates. For example, if you look at the second week of September, you will notice that the 91 days treasury bills are being offered at 7.941 something. If you look at the 182 days treasury bills, the interest rate is about 8 point something. If you look at the 364 days treasury bill, the interest is 9.78 something. So you can see the interest rate offered by the government, first of all, is dependent on the length of the treasury bill. So how do you go about buying treasury bills? The first thing that you need to do is register a CDS account with the Central Bank of Kenya. You can go to their website, check the DAO CSD account, and then it's a self-service registration process. You can also download the DAO CSD app from your Android or iTunes, and then you take yourself through the process of registration. Once you're registered as an investor, the next step is on weekly basis to go to the Central Bank of Kenya website, find out the treasury bills that are on sale. The process of buying the treasury bills is called bidding. So you bid, and the way you bid is by declaring the amount of money you want to spend. It is advised that you bid non-competitively because the competitive bidding is left to major banks and major institutions that have a lot of money to procure the treasury bills. The Central Bank of Kenya, before the end of the week, will tell you whether your bids were successful. It will give you a timeline to go and make payment. Interesting is that at the end of the period, Central Bank will deposit the money directly into your account unless you had indicated that you want to roll over to the next period. Generally, that is how you go about buying a treasury bill. You can buy it through a commercial bank or an investment broker, but that is going to be at a fee. If you like this episode, subscribe, like, comment, and share.